Hello, welcome to this Ned Davis research video where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grindal, about central banks. Alejandra, where are we seeing a shift in global monetary policy?
Yeah, I would think we are. So the first, which I think was a pretty big change, was the Bank of Japan. It actually raised interest rates for the first time in 17 years. This is a pretty big deal. And this effectively ended its negative interest rate policy. The other thing it did is it abandoned its yield curve control policy and ceased purchases of ETFs and REITs. Quantitative easing, however, still remains intact. So it's not like they went to complete tightening, but they're definitely moving toward a path of normalization. On the other hand, the Swiss National Bank cut its main rate, and this actually made it the first of the major developed central banks to ease policy in this cycle. And although there's been no change in policy, recently, the Fed, the Reserve Bank of Australia, the Bank of England, the Bank of Canada, so this rounds out a lot of the rest of the central banks, are seen as cutting rates later this year. Also, several emerging, particularly Latin American central banks, began cutting rates actually last year. Remember, they were the first to raise rates in this rate hike cycle, and they were the first to cut rates in the cycle. And overall, the net effect of all of these policies saw the share of the world's central banks in tightening cycles fall to 70%, which is the lowest since May of 2022, and down from a peak of 91% in July.
So with fewer central banks tightening, does that, in your opinion, present a bullish outlook for equities?
Yeah, I mean, the NDR rule, right, Brian? Don't fight the Fed, or often I like to extend the definition to don't fight the world's central banks. And so what you'll see in this chart is that historically, the best period for equities is when more than half of the world's central banks are in easing cycles. Now, we're not there yet, but given the recent central bank activity, we could get there in the second half of the year. And, this is sort of in line with the outlook that the guidelines we put in late last year for 2024. Now, for now, we're sort of in this period where most central banks have paused. This is still consistent with positive equity market gains, but just not quite as large as when more than half of the world's central banks are in easing cycles.
So given the recent inflation readings in the US, the Fed may be slower than other central banks to ease monetary policy. How does that impact your analysis?
Yeah, it's a really great question. Just to preface, we, at this point, just based on our projections and the current data, we do still expect the Fed to ease policy this year. But other central banks may actually do that before the Fed. So that's a little different than the outlook we had been looking at, say, late last year, because of this data you mentioned. And what's interesting is that in recent history, this is actually highly unusual. Usually the Fed starts. In fact, since the early 1980s, the Fed has led all but one, and it happened to be in 1998, of the easing cycles among major developed market central banks. Now, the good news, because you asked, what does it mean for equities, is that equities still rise. Doesn't matter, which central bank goes first. So we went back and we looked at this historically. And incidentally, too, the dollar also tends to weaken in these instances. Again, no matter which central bank goes first. But the caveat is that the Fed has to eventually follow with cuts. I would say a more worrisome development, which again is not our base case scenario, but still, something we have to keep in mind, is if the Fed actually increases rates while other parts of the world are easing policy. And again, this is highly unusual. This doesn't happen very often. However, we did see it happen in 2015. And in that case, we saw the dollar strengthen, makes sense. And equity markets were actually down a year later.
Alejandra, thank you very much for your insights. NDR clients can read Alejandra's research notes in her weekly Global Economic Focus publication. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery, on TAMPs, and as ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those in listen-only mode, video versions, including the charts featured in this podcast of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.